As the details of the FTX disaster continue to emerge, it's becoming increasingly clear that this is a complex and multifaceted event that has far-reaching consequences. In addition to the billions of dollars in losses suffered by the trader and the firm, the disaster has had a ripple effect throughout the financial market, leading to a drop in the value of certain securities and raising concerns about the stability of the broader market. The impact of the FTX disaster is not limited to the financial industry, however. Many people are wondering how this disaster will affect the global economy and whether or not it will lead to a recession or other economic downturns. While it's difficult to predict the long-term effects of the disaster, it's clear that it has the potential to have significant consequences for businesses and consumers around the world. The FTX disaster has also sparked a heated debate about the role of regulation in the financial industry and whether or not more stringent measures are needed to prevent similar disasters from occurring in the future. Some have argued that the disaster was a result of lax regulation and oversight, while others have pointed out that the trader in question was able to make such risky bets because of the complexity and opaqueness of the financial instruments they were trading. It's worth noting that the financial industry is highly complex and regulated, with many different actors and stakeholders involved. Regardless of the root cause of the FTX disaster, it's clear that it's had a significant impact on the financial industry and has raised important questions about risk management and regulatory oversight. Many are calling for reforms to be implemented in order to prevent future events like this from occurring. It remains to be seen how the industry will respond to these calls for change and whether or not sufficient measures will be put in place to prevent similar disasters from happening again. From a free market perspective, this event serves as a reminder of the importance of taking personal responsibility for one's actions and the risks associated with high-stakes trading. It also highlights the need for transparency and proper risk management in the financial industry to ensure the stability of the market and protect all stakeholders involved. However, it's also important to consider the impact of any regulatory changes on consumers and to ensure that the best interests of the consumers are taken into account in the process of implementing any reforms. Hey there, are you ready to dive into the complex world of the FTX disaster? This event has had a major impact on the financial industry, with consequences that extend far beyond just the trader and the firm. It's also sparked a debate about regulation and the role it plays in preventing similar disasters from occurring. So, what exactly happened during the FTX disaster? How will it affect the global economy? And what are the calls for reform in the wake of this tragedy? Now, let's get to the video to find out the answers to these questions. As you might have already known, FTX was a platform that let people buy and sell digital currencies like Bitcoin and derivatives, but it's been accused of using money from its clients' accounts to make risky trades through its affiliated company, Alameda Research. This scandal has been really disappointing and even devastating for investors, according to Louise Abbott, an expert on cryptocurrency asset recovery and fraud at Keystone Law. The events surrounding FTX could change the future of cryptocurrency industry. After the 2018 cryptocurrency market crash, lots of new companies and projects, including FTX, popped up. But it looks like the number of these firms and digital currencies will go down in the coming years because of the negative impact of the FTX controversy. The consequences of the FTX disaster have already caused crypto lender BlockFi to go bankrupt. They had previously gotten funding from FTX. Now people are wondering about the stability of other trading and lending companies like Gemini and Genesis. Peter Smith, the CEO of blockchain.com, said in a conference panel discussion that FTX and Alameda were big investors in the cryptocurrency industry, and the potential ripple effects of their collapse could be a big problem for the whole sector. Near Foundation, which operates the Near blockchain network, got investments from FTX, while Near's CEO, Maric Flamand, said that the company only had limited exposure to FTX. The collapse was still a surprise and could lead to funding and resource shortages for various projects. Flamand also said that we don't know the full extent of the contagion yet, and not all the dominoes have fallen. There have been concerns about the financial stability of other major cryptocurrency exchanges following the collapse of FTX. According to CryptoQuant, about 900,000 bitcoins have been withdrawn from exchanges since early 2020. Binance, the biggest exchange in the world, has faced questions about the reserves it has to protect customer funds and has had billions of dollars in outflows in the past week. While there's no reason to think that Binance is at risk of bankruptcy right now, exchanges like Binance and Coinbase are facing a tough market environment with falling trading volumes and account balances. Experts believe these exchanges will still be important players in the industry, but their success will depend on how well they manage risk, their governance, and their approach to regulation. Luis Abbott said that exchanges that follow best practices will survive in this difficult market. Even though the cryptocurrency market is currently down and it's affecting investors, people expect the digital asset industry to recover. Supporters of Web3, a proposed blockchain-based internet, think the 2022 cryptocurrency market crash will lead to more innovative uses of blockchain technology instead of just being used for speculative purposes like it is today. Maric Flamand, the CEO of NEAR, pointed out that many companies have digital innovation or metaverse innovation divisions that see the staying power of blockchain technology. Non-fungible tokens, NFTs, have the potential to change how people interact with virtual properties in games and events. They're digital assets that track ownership of unique items on the blockchain. Now, don't miss out on any updates about the future of the cryptocurrency industry. Make sure you've subscribed to our channel so you don't miss any important developments. And don't forget to stick around and keep watching to learn even more about the world of blockchain and cryptocurrency. Many people still have trouble understanding and using blockchain technology. Cordell Robin Coker, the CEO of Carry First, a mobile games company, said it can be hard for people to create wallets, manage keys, and use different platforms. He compared the current state of Web3 to the internet in the early 1990s when it was clunky and hard to use, but he also pointed out that as the technology gets better and easier to use, more people will be interested in it. Robin Coker said that early adoption of Web3 is similar to early adoption of the internet, where the first users had to deal with awkward interfaces and slow connections. As the internet became more streamlined and accessible, more people started using it. In one day, more than $600 million was stolen from FTX cryptocurrency wallets. Right after the theft, FTX announced on its official Telegram channel that it had been hacked and told users not to install any updates or delete all FTX apps. An administrator in the FTX support Telegram chat said that FTX apps were malware and that people should stay away from the FTX website because it might contain Trojans. This message was pinned by Bryn Miller, the general counsel of FTX. Many FTX wallet holders reported that their FTX.com and FTX US wallet showed balances of $0. It's possible that the FTX API was down, which could have caused this problem. On-chain data showed that various Ethereum tokens and Solana and Binance Smart Chain tokens were transferred out of FTX's official wallets and moved to decentralized exchanges like 1inch. Both the FTX and FTX US platforms seem to be affected. These transfers happen on the same day that FTX filed for Chapter 11 bankruptcy protection in the United States, citing the loss or misappropriation of billions of dollars in user funds. Now, there's been speculation that someone inside the company, instead of an external party, might have been responsible for the losses. But these suspicions are just speculation at this point. It's a good idea to consider transferring your digital assets to a separate cryptocurrency wallet to make them more secure. Many exchanges let you move your assets to these wallets, which can be online on a different platform or offline on a thumb drive with extra security measures. While holding your cryptocurrency this way doesn't protect you from declines in market value, it can help you avoid problems with locked accounts or exchanges closing their withdrawal window. The US stock exchanges are already heavily regulated and have strict reserve requirements in place, but recent events might lead to more regulatory oversight. Senator Elizabeth Warren of Massachusetts has called for stricter enforcement and said she's urging the Securities and Exchange Commission to focus on consumer protection. Cryptocurrencies are naturally risky and should be approached with caution because of this. They should only make up a small part of a well-diversified investment portfolio, and it's a good idea to spread out the risk by investing in a variety of different cryptocurrencies. Failing to do this could expose you to significant financial risk. FTX has a lot of debt to its customers. According to a court document from November 19, the exchange owes its top 50 creditors almost $3.1 billion in total, with over half of that amount, $1.45 billion, owed to the top 10 creditors alone. It's estimated that the company could have over 1 million individual creditors and has reportedly been in contact with various international financial regulatory agencies. There's evidence that FTX, the recently collapsed cryptocurrency exchange, had a secret backdoor feature built into its accounting software by Bankman-Fried, which he allegedly used to transfer billions of dollars without sending off any warning signals. This backdoor function let Bankman-Fried manipulate the company's financial records without being detected, even by external auditors. This revelation has big implications for the integrity and transparency of the company's financial operations. In a series of tweets, Bankman-Fried apologized for the situation and said he was surprised by how things turned out. He expressed hope that things would be able to recover and that the situation could bring about greater transparency, trust, and governance in the industry. Despite the circumstances, Bankman-Fried remained optimistic and even mentioned his desire to start a new business to generate enough money to pay back those affected by the collapse of FTX. The FTX disaster is a great example of how even the most well-intentioned technological advances can go wrong. What was supposed to be a groundbreaking new platform for futures trading has turned into a nightmare for investors and traders. The root cause of the disaster is still unknown, but it's clear that it was a failure on multiple levels. From a flawed business model to inadequate risk management, the FTX disaster shows the need for greater scrutiny and oversight in the world of fintech. The collapse of FTX has been a major event in the world of cryptocurrency, and it's a reminder of the risks involved and the importance of proper risk management and regulation. But despite the challenges, it's clear that blockchain and digital assets have the potential to change the way we do business and interact with the world. As we bring this video to a close, we want to know what you think about the future of digital assets. Do you believe that blockchain technology will continue to grow and thrive, or do you think it's a passing fad? Let us know your thoughts, and if you're interested to keep up with latest world updates, be sure to check out our other videos. Thanks for watching.